Almost every beginner loses money trading gold, but not because their strategy is bad. They are making a few simple mistakes that most traders never realize. So in this video, I'm going to show you the 7 biggest gold trading mistakes that keep beginners losing money and how you can avoid them. Make sure you stay until mistake number 7 because it is the one that destroys the most accounts. So if you are serious about becoming a profitable gold trader, subscribe because every week I share practical strategies that are easy to understand and apply. Now, let's get into the first mistake. The first mistake is trading without a trend, guys, right? So now, last week I lost almost 300 cents right here just because I wasn't following the trend, guys, okay? So now I lost a lot of money. Why? On this setup that I'm going to show you here. You see the market, it was buying, right? But because it had left a low down here, me, I wanted to sell it on this resistance right here. See, this is a very good resistance. So now I bought from right here when the market actually closed. Sorry, I sold when the market closed below this low right here. Okay, so when it closed below this resistance level, I sold and I wanted the market actually to come up to right here. Okay, I want the market to come up to right here, down here, but now that's when the market came and it just bought, continued up right here. Okay, so now you are realizing that I wasn't following the trend. Why? Because the market had already made what we call the change of character right here. Okay, the market had made the change of character on our higher time frame, right? So that's why the market just retraced here and it just bought again. So I lost almost 300 cents on that gold trade just of not trading without a trend. So if I was following a trend, of course I would have bought on the retracement because now it had made a change of character right here, or a break of market structure. It came back on our order block and retested it right here. So before placing any trade, ask yourself one question: is the market moving up? Is it moving down or sideways? If you trade against a trend, your chances of winning drop dramatically. Okay. Mistake number 2 is entering too early. Okay. Many traders see one candle moving and immediately jump into the market. Okay. But experienced traders wait for confirmation. Wait for the price to reach the key level, right? And also you wait for the market to react. Then you enter after confirmation. Now, yes, this is a support level. Okay, this is a support level. But when the trader just sees this green candle, that exact trader will just enter into the market without giving him or her any confirmation for the buying trade, guys. So it is better to wait for the confirmation on your support level before you enter the market, right? You can see that if the trader actually entered from right here because of this green candle on your support level, not if the market came back and it took away that trader, guys. Okay, that trader was taken out. Okay, so wait for the confirmation. If this is your support zone, if this is the support zone that we are looking at, right? Wait for the market to sweep it very well. Let the market take away those early buyers. As you can see, the market took away these early buyers. It gave the confirmation to close the above. It is showing that the market, that the bears have lost control and the bulls are coming in, right? Now you see the engulfing candles have been taken, and also the market structure shift has been come. Then you enter. That's the confirmation that we need. We need a market structure shift. We need the candlestick confirmations on your support or resistance level. And then mistake number 3 is ignoring support and resistance. Ignoring support and resistance is like gold respects important price levels, right? So now when actually you look at this support level right here, this is support level. Always gold will respect these support levels and resistance levels. This one, you can see that when the market came back right here, okay, it just faked out some scalp buys here, but those ones who are to hold for some time, actually you can see the market came back to this support level and it took away these buys, these stop losses that were here. Okay, it took away those ones. So now here you have draw the major support and resistance levels, right? We say that we don't draw only one line, we draw it as a zone, not as a line when you're drawing these support levels, because this one will help you to get a high reward low risk trades, guys. Okay, so you draw the major support resistance zones before looking for entries. That means here we drew, this is our support right here. Now when the market comes back here and it takes away these early buyers, now it is our round outlook confirmation that we have talked about in mistake number 2. Okay, you have to wait for confirmation. Don't enter too early. Then when the market sweeps out these early buyers, now wait for it to make a market structure shift. As you can see right here, it made a market structure shift right here. It came back. This is a retracement. Now, of course, here we would just enter on these bullish engulfing candles right here. You can see how the market actually reacted. It bought massively, guys, right, on the confirmation. Then mistake number 4 is risking too much, guys, right? When you risk too much, actually, the market will reach there. I told you last week I lost almost 400 cents because I risked too much, right? Because now I was selling from this resistance level, not at all the market to come back, because I was putting the stop loss above this high right here, okay, expecting the market to come back because it was a 1 to 2 trade, because the TP was right here, okay, it was a 1 to 2 trade. I was expecting the market to come back because it was showing bearish signs, not until the market come and took me out. That risk was too much, okay. Never risk a large percentage on your account on one trade. At least if you have $100, risk at least 5%. Risk $2, right? Or $5 maximum, okay. Even the best traders lose trades. Professional traders survive because they protect their capital. Always we want to protect our capital more than making money, okay. You think long term. Don't just risk a lot of money because you want a lot, okay. This is about compounding. That's when the accounts will grow, guys, okay. Mistake number 5 is chasing the market. Yes, chasing the market here because you are seeing bullish candles, because yes, you have your resistance level right here, okay, and yes, it has created these bullish candles. You are seeing the bullish candles, they are massive, okay. Now you want to enter on this market, on this moving candle, because you are seeing this big candle, bullish candle. Now you are entering, not to the market to retrace and takes you out, or to put you in a drawdown which is big, okay. Don't chase the market, guys, okay. So have you, I think you have ever watched gold move without you, because now you had to buy, but now the gold has moved without you. Then you enter after a huge candle, this candle that we are talking about. When it makes this huge candle, now you are entering because you are chasing it. That is what we call chasing the market. You are seeing bullish candles or bearish candles, then you just enter immediately. Most of the time price pulls back immediately after you enter. I think you have ever realized that. So when you enter right here, the market will pull back. It will take you out because you are chasing it. Always wait. Okay, wait for retracement and enter at a buffer price, right? Enter at a very good price. And mistake number 6 is trading every day. Okay, so now you don't have to trade every day to make money sometimes, okay, because sometimes some days like Monday or Friday market is slow because Monday market had already opened and Friday market is closing, okay. So when you don't see confirmation, don't trade, don't enter. You don't have to trade every day, guys, okay. Sometimes the best trade is no trade. When you don't take any trade, that is the best one, because someone might take and loses. So wait for high quality setups. One good trade is better than 5 bad ones, guys. And the last mistake, that's mistake number 7, is not following a trading plan. This is the main mistake that make traders lose their money, guys, right? They do not follow a trading plan, okay. This is the mistake that blows most of the accounts beginners are always in. So beginners change strategies every week. For example, now one loss like this, okay? One loss, they switch systems. Another loss, they start watching another YouTube video. Successful traders do not do that. They choose one strategy, they practice it, improve it, and stay consistent, guys, okay? So always follow the plan that you have said, that I'm going to trade this day, I'm going to use this confirmation, or something like that. Then you are following your plan. So if you avoid these 7 mistakes, you will already be ahead of many beginners, okay, that trade gold. Okay. Now I want you to know, which mistake have you made the most, guys? So if this video has helped you, consider subscribing, give a like to this video, share it friends because they will also benefit. Bye.